Welcome back to, and thanks for joining us here on America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates. 419-794-3030 is the phone number. If you have questions for the guys, you want to find out more about the Ultimate Estate Planning Checklist, the Retirement Team Action Plan, that is the number 419-794-3030, the website, arhq.com. If you missed the first half of the show, so want to catch up on previous editions of America's Retirement Headquarters, available on YouTube, Apple Podcasts, Spotify, wherever you consume your media. Just search for America's Retirement Headquarters. It's all there for you. In the first half of the show, we did talk about taxation a little bit. Back in 2022, part of the Inflation Reduction Act called for $80 billion with a B dollars to go to the IRS over 10 years to go after tax cheats. Recently, we heard President Biden say that's resulted in $1 billion collected in back taxes. Apparently, they didn't have to look very far, maybe, the next cubicle over. There was an IRS audit that found nearly 150,000 IRS employees themselves failed to pay their taxes, and the amount owed was $1.5 billion. Look, preventing tax trouble starts with good tax planning. How do you help keep clients, how do you help them implement a tax strategy that lowers their overall bill in retirement?
Very interesting in the fact that their audit found out how many of their employees failed to pay their own taxes. Sounds like another government disaster.
As I say, not as I do.
Yeah.
Right. But, when we're looking at it, what you want to do here is you want to create a tax roadmap. That is the best thing that a family can do to help control their individual taxation. The tax code is very confusing, and I would say from my personal experience, the overwhelming majority of the people will complete their federal tax and state return. They'll file their tax return, they'll put it in the file cabinet, and they'll put it away and not think about it until they collect the information in the next year. And collecting information is simply recording the history. So what we want to do is create the tax roadmap for you. The tax roadmap is one component that we have in what we call the Retirement Team Action Plan. So if you have not got the Retirement Team Action Plan and you have more than $250,000 of retirement assets saved up, the Retirement Team Action Plan is going to walk you through taxes, estate planning, asset protection, and money management. We're going to share with you our observations on where there's threats and opportunities in your particular situation. When we go through the retirement section and we look at the tax roadmap, what we're going to do is we're going to, first of all, visually show you where you're at when you follow through on the tax continuum, meaning, where you're at tax bracket wise. We can also talk about what the future could look like when you retire. If you're not collecting Social Security, what your retirement income is going to be. We'll show you what that tax roadmap could look like. We'll talk to you a little bit about, the expiring tax laws and what that could look like as well. The next thing that we're going to do is we're going to help you make sure you cross the T's and dot the I's and work with your accountant and CPA. And I should say that, again, we're not accountants, we're not CPAs. Anything that you do for changes, before you make those changes, I always think it's a great idea to talk with your tax professional. But some of the things that we talk to folks about in that team approach, which means we're willing to work with your professional and or bring a tax professional in to help out, is looking at things like Roth conversions. I know, Chaz, you and I were working earlier this week. We were looking at a case design and had looked at a family situation, and they had money saved up in their 401k, money invested inside of some other accounts, and money set aside in savings. But one of the things that they forgot to do was take a look at putting money into Roth contributions. And so knowing that Roth contributions have the ability to provide tax-free money for growth and income in the future, putting that on the checklist is extremely important. The next is looking at Roth conversions. We had another conversation when we were looking at where they were at in their tax bracket, and they had a little room left over where they knew where the taxes were today, had the ability, they could do some conversions, meaning take money from a tax-deferred IRA and move it over, pay the taxes now, and put it into a Roth IRA so that remaining balance grows potentially tax-free in the future, was another great strategy. Something that you talk a lot about and have built into the Retirement Savers checklist is the optimization of investment accounts for tax efficiency. I mean, how many times do you get together with folks and you look at it and they own like all the same thing and all the different accounts when they come over with different investment accounts?
Yeah.
owning different investments inside of your taxable accounts versus your tax deferred accounts versus your tax free means optimizing the investments for tax efficiency. That optimal strategy can make your portfolios much more tax efficient. And then, in addition to that, looking at the tax efficient withdrawal plan for retirement, because it's going to have an impact on things like, how much you pay in Social Security. It's going to have an impact on how much you pay in health insurance costs. Again, the solution for this is getting the retirement guys retirement team action plan. And inside of this retirement team action plan, we'll continue to go through and look at all of the different areas. Things like, looking at the scenario of making charitable contributions from your IRA, if you're taking required minimum distributions, maybe a more efficient strategy than waiting to take money from after-tax money that's in your bank account. Understanding what we talked about in an earlier segment, the impact of the decisions that you make on your investments will impact what happens with your overall estate plans. End of the year, you need to make sure that you have a meeting scheduled for capital gains harvesting, capital loss harvesting, understanding what the tax impact is for those gains and losses that have been made throughout the year, and making those decisions. Because what happens is when December 31st, when the ball drops, a majority of the tax saving strategies expire. Not all of them, but a lot of them. So that ultimate estate planning checklist is part of creating that retirement roadmap, which is exactly some of the things that we go through when we're looking at taxes. Again, it's part of that retirement team action plan.
Yeah. Nolan, I love this topic of taxes, and I think it's so impactful for me in my practice as a financial planner is because it's something that we can actually somewhat control. And in a world and in a market and industry of so much of the decision making being out of our control, you don't know what the stock's going to do, you don't know what the Fed is going to do, but you can absolutely control when and if you decide to pay taxes. And so I think that tax planning and financial planning, the merger of the two has really become or gone through a renaissance, if you will, as we're starting to look ahead to this 2025 expiration of the Tax Cuts and Jobs Act. We know for sure that taxes are going to go back to where they were in 2018 without any further action from the government. And so it's kind of almost like this big dark cloud kind of hanging over everybody's plans and finances, not knowing what taxes are going to look like in pretty much just under less than a year. So the tax roadmap is designed to help you kind of visualize the impact of a lot of different scenarios. You talked about making contributions to Roth conversions, and then also the topic that I love that you referenced there is tax location versus asset, or I should say asset location versus asset allocation. So when it comes real quickly to managing your investments, everybody's heard of the term asset allocation, but the concept of asset location is kind of like the where compared to the asset allocation's what. So with asset allocation, we're focusing on, what type of investments, different asset classes, stocks, bonds, real estate, in a balanced approach. How do we, how much of each one of those asset classes do we need? But with tax location, we're focusing on, for instance, placing your high growth investments, Nolan, in stocks in tax-advantaged accounts like your Roth IRAs. And this can help you avoid taxes on those big capital gains that are just kind of being embedded and growing in your IRAs versus holding bonds and other income-generating assets in your tax-deferred accounts like your traditional IRAs and your 401ks and kind of deferring that interest in an IRA until you actually have to take it out for retirement. And so, that could save you a couple $1,000s every year just by looking at where the interest is coming and how it's being taxed. So, by combining a combination of those simple strategies on a tactical, basis, meaning short term, how can we structure your portfolio to save on taxes, all the way to looking at the strategic impact of a systematic Roth conversion strategy for the next 20 years. the tax roadmap is really the intersection of long, short, tactical, strategic concepts and scenarios being all kind of brought together in one simple to understand strategy or strategies that are designed to help you ultimately pay less tax over your lifetime. And I think that's should be, if not one of the primary focuses of the meetings that you're having with your financial planners is tax. Because like I've said, if we pay tax at 20 to 30%, how long did it take you to make 30%? I mean, it takes a long time, years in some cases, to make 30%. You can wipe that out in one day of bad tax planning. Make sure you don't do that. Work with the advisors here at Retirement Headquarters.
And that's why it all works together as part of that retirement team action plan. The T stands for taxes, of course, and estate planning, which you talked about earlier, assets, money management. Because it's not just one thing that could be a detriment to your retirement plan. Neglecting one or the other could really cause serious problems down the line. The retirement team action plan is kind of an all-encompassing, holistic sort of approach. And so to get that created for you or maintained for you, or if you just want a second set of eyes on your plan right now, maybe your financial professional right now is not talking to you about tax saving strategies. It is a very important thing that sometimes does get neglected. Just reach out and schedule a time to speak with the team at the Retirement Guys Formula, 419-794-3030, or you can go to the website and find out more about the team as well as schedule a time to speak with them, arhq.com.